Erik, please give me your definition of a hedge fund, an explanation on short selling, and how the tools of modern finance manage risk while actively seeking alpha.
Quite a few questions. So I think a hedge fund by definition is a fund that can gear or lever and sell short something that it doesn't own. And predominantly what these type of funds do to the layman, really to explain it to the layman, is depending on how the mandate allows, no two mandates read exactly the same, and I think this is for obvious reasons. Allocators have different categories in which they prefer managers to operate in, risk buckets also probably. And I think depending on the mandate, it really allows the manager to then take a certain amount of money and go to the prime broker, borrow script, do repurchase agreements, and through that system leverage their portfolios. And I think critically also what probably differentiates hedge funds from the long-only funds more specifically is, especially in the fixed income space, they make use of derivatives much more actively than in the long-only space. And again, with prime broker agreements, this is a much easier thing to do, even in the regulated space. As a long-only manager, especially as a smaller manager, I can tell you that it's very, very hard to get trading lines to sign ISDAs and ISMAs and all these things to trade derivatives with local or foreign operations. So those would be, I think, the core differences, or the core differences between a hedge fund and a long-only fund, but also in terms of the tools and the skill set. And I think I'm not the technical person of the business. What I like to flip the question slightly in a different direction and assist allocators and investors to understand the product slightly differently also, while still trying to answer the question, is to understand what a hedge fund does and what differentiates it. So it's not just that it can lever and short sell, and there's potential infinite losses if it short sells, for instance. So in the regulator space, this is something that is addressed. Some mandates have hard stop losses, which we can get to, also speaking to our philosophy and what differentiates us. But I think critically important for investors to understand is that the key difference between a hedge fund and a long-only fund is that it allows the manager opportunities and a tool set very differently from the long-only tool set and the long-only skill set to operate throughout market conditions and throughout liquidity conditions very differently from what a long-only fund can do over time. And once the industry starts appreciating that more, I think we'll get to a stage where hedge funds will become a more popular tool set in the overall tool set.